Hi everyone, Andy Pickering here, and what a crazy week or 2 weeks it has been in the crypto markets. So this is my crypto market sentiment report for this week. Now, I've started doing these as video podcasts. So if you're watching this on YouTube, great, that's where you should be. If you're listening to this on Spotify or Apple Podcasts, that is also fine. You can do that, but if you'd rather come along with me on a visual journey through the wonderful world of crypto Twitter, then you'll find this video on the Brave New Coin YouTube channel. All right, let's get into it. All right, so let's just start over here with a quick look at the Coin360 heat map, and we can see that, yeah, Bitcoin is just over 38,000 US. So, you know, that's it's down slightly from yesterday. We didn't quite make 40K again yesterday, but certainly better than the weekend when it really got as low as around $30,000, which was obviously a very steep drop, right? So, you know, one way of understanding this is, of course, our old mate, our old friend, the Bitcoin Fear and Greed Index. So this is today's reading. Today it's at 22, still at extreme fear, but just at 22. I think it did get as low as 10 over the weekend. And if memory serves, I believe the lowest it's ever been is 8, and that was during the March 2020, COVID-driven global markets crash. So that was 8 in March 2020, down to 10 on the weekend. So that really is extreme fear. And look, I felt it myself. You know, it's that old adage when you feel like puking and the market is down. Yeah, often that's a good time to buy, but man, you really could feel the fear and the emotion across crypto Twitter, or the psychic pain as traders were getting liquidated. And man, yeah, it was intense for a while there, right? So this is just a funny. Here you go. Yeah, Fear and Greed Index. It was dead for a while there. Yeah, things got hectic, right? So you know, another way of understanding this is, and again, guys, if you haven't watched one of these videos before, and this is only my third or fourth time doing one of these crypto market Twitter sentiment reports, but really what I'm doing is I'm just going through some selected tweets and kind of information or data points from the last few days, just to try and get a little bit of an idea on what is happening, and have a look at what people are saying, really. So that's all I'm doing here. So, for example, Raoul Pal, of course, who is the CEO of Real Vision, and he puts it into context. He says a major asset class, being crypto, of course, crashed 42% in 14 days, wiping out just over $1 trillion in value, and an orgy of liquidation of people who are up to 100x leveraged, with very low regulation, of course. And many tokens, altcoins, they have fallen up to 70%, really. So, that puts in context the kind of volatility that is a unique characteristic of the crypto markets. We all know that. So again, Raul is just saying crypto had a major VAR shock test, and nothing really happened apart from traders getting liquidated, getting wiped out. But the leverage liquidation was offset by over collateralization, right? So no one was left holding the baby. No one went under. The Fed didn't have to step in. DeFi didn't break. Stable coins remained stable. Some of the exchanges did go down for an hour or two, but they came back online. What the point here that Raul is making is, this was really a real market-wide systems test under intense volatility, under intense sell pressure. And the Fear and Greed Index was at extreme fear, but we have come out the other side, at least for now, right? So yeah, here's one way of putting it. William Clemente, he's just using this chart from Glassnode, which effectively says that you survived the largest capitulation event in Bitcoin's history. So we see that here, right? This is the selling. I think that's the selling of coins that were actually not in profit. But yeah, so you can see, man, it is what it is. The largest capitulation event in Bitcoin's history. But to kind of, rationalize that from, I guess, Bitcoin's perspective, of course, Bitcoin is, what's the word I'm looking for? Agnostic. Is that the right word here? But Bitcoin doesn't care, Bitcoin simply continues to work as intended, securely producing block after block, like clockwork, following its deterministic supply schedule, which of course is controlled by no one and unstoppable now for more than a decade. And of course, Bitcoin just gets stronger over time. So, that's always a good rational take on things, and good to keep in mind when we do see these intense market turns to the downside. So just looking at the charts, and I'm using the chart here from Josh, of course, who is, Josh Olszewicz, Carpe Noctem on Twitter, and obviously the lead analyst here at Brave New Coin. And if you're watching this on the Brave New Coin YouTube channel, then chances are you are already a subscriber and you probably do watch Josh's videos already. So I don't need to tell you just how good they are, and what a kind of, Josh as an analyst, I like his style, and I think most people do like this about him. He's just very clear and calm and kind of even-headed about things, and just points things out as objectively as he can, which is all a good analyst should do, really. But I just paused Josh's video here from, I think, 2 days ago. This is obviously showing the cloud, which Josh is, well, he's a leading proponent of the cloud, one of the cryptos analysts, probably the best exponent of the cloud in terms of crypto analysts across the board, really. So, you can see Bitcoin here, Josh would say, broke above the cloud. And then while you're above the cloud, we're bullish right up to here. And then since then, now we're down below the cloud. So you can watch this video, but I think Josh is effectively saying, this could be a sign of bearishness for the short term, maybe the medium term. And, it's really only, you want to see Bitcoin flip above the cloud before you can be really super bullish again. But it's just too soon to see how this all plays out. And Josh, in this video, I think he says he wants to see what the price does for another month or so before we can really get confident and where the trend is going. But just touching on, and this is Josh's one of Josh's famous pitchforks, of course. So you can see Bitcoin right back at the median of that pitchfork. So, up or down. And Josh says, I think in this video, he said, if we break 30, you could expect Bitcoin maybe to come down to 18,000 US, which, that's lower even than the previous all-time high back here. But Josh did say that he would be looking to sell kidneys if price did get back to 18K. So, yeah, I don't know. I encourage you to watch those videos for yourself. I'm no technical analyst, but of course, Josh is one of the best in the business. So, yeah, great resource to have here at Brave New Coin. But let's keep it moving, right? So what else is happening? Of course, you will have seen probably the Elon. And yeah, I can't believe here we are talking about Elon again, but he is now, like it or not, just a key part of the crypto narrative. On balance, yeah, well, it's hard to say whether that's a good or a bad thing. On balance, I think it's probably good, but it means that Elon brings his own brand of volatility to the markets, and he has his own set of incentives and motivations for how he engages with crypto. So a couple of days ago, Elon said this, right? He said he spoke with North American Bitcoin miners and they have committed to publish current and planned renewable usage and to ask miners around the world to do the same, potentially promising. Says Elon. And of course, you remember this is in response to Elon and Tesla's concern about the increase in non-renewable based power sources for Bitcoin mining and the effect that could potentially have on the environment. And, obviously doesn't want that to happen long term. Anyway, so this conversation with North American miners that Elon Musk has had, it then emerged that none other than Michael Saylor of MicroStrategy had set up this meeting, right? So Michael explains that he hosted the meeting between Elon and leading Bitcoin miners in North America, and the miners have agreed to form the Bitcoin Mining Council to promote energy usage transparency and accelerate sustainability initiatives worldwide. Now, on the face of it, this all sounds very promising, very positive. It's good to see that Michael Saylor obviously has a relationship with Elon and is able to get him back to the table and kind of keep the dialogue going in terms of Bitcoin mining and Elon's concerns over where the energy is coming from and all that stuff. But of course, is there a concern about this, right? Because the whole idea of Bitcoin mining is it should be decentralized. So, this is just a good example of some of the criticism that this Bitcoin Mining Council has faced, right? So someone said here, after careful consideration, your address has been flagged as suspicious by the North American Bitcoin Mining Association. Unfortunately for you, our decision is final and cannot be appealed. Thank you for using Bitcoin trademarked, Bitcoin TM, and powered by Tesla. Yeah, so I mean, this is satire, really, isn't it? But I guess the concern here is, is there a possibility that a Bitcoin Mining Association effectively becomes a centralized entity, a centralized point of potential failure, a centralized point of attack? For example, the concern would be that the state or the government or the Fed or state actors or entities could use something like this as a kind of a leverage or a pressure point to try and apply some kind of a regulatory framework or whatever it is, right? So that's kind of the concern. But Nick Carter, I think Nick's obviously a very good articulate Bitcoiner, and I think he puts it into perspective. So it's either is it billionaires in terms of Elon and Michael Saylor attempting to commandeer the Bitcoin consensus with a shadowy centralized closed door cabal, or well, that sounds scary, he says, much scarier than simply probably the closer to reality idea that miners who account for 10% of Bitcoin's hash rate have agreed to disclose basic information that many of them were already disclosing anyway. So, I think that's a fairly rational and accurate take on things. Go away. And Nathan Whittemore, NLW, he put out a what do you call it, a Twitter poll on this. So, right, he says, does the Bitcoin Mining Council, does it represent dangerous centralization, or is it a good move for miners and Bitcoin as a whole to kill the FUD on the energy usage? Or is it both one and two, or something else entirely? And I think it actually is a little bit of one and two. And look, I'm with the majority there. So, too soon to see how this plays out. But on balance, I think it's probably a good move in the short term, just because, one way of understanding this is, if Elon is just left to go on a rampage, and keep pushing this narrative that Bitcoin is bad for the environment and Bitcoin mining is an existential threat to the environment, that narrative becomes very, very hard to push back against. And, ultimately that will very much slow down Bitcoin adoption. So if Michael Saylor, God bless him, if he can get Elon back on side with the miners, work with the miners, and ultimately, the longer term play, you'd have to think that, Elon would divert some of his considerable resources to really helping the sustainable crypto mining movement. I'm sure that's what he has in mind. So, I think on balance, you'd have to see this as a positive move. And so our friends at CoinDesk have just talked to Michael about this. And Michael says, look, the Mining Council is here to defend Bitcoin against uninformed and hostile energy critics, right? So it's really just, he says it's just a loose organization that could publish energy usage data in an effort to address the concerns that Bitcoin is not environmentally friendly, because Bitcoiners have a good story, but it's a complicated story and we need to find a way to share the story, right? I agree with that. So just going through here. Yeah, I mean, this is why the critics have been suspicious, and rightly so. It's, if you think back into the ill-fated New York Agreement of 2017, when sort of a closed-door group of various Bitcoin power entities did look at different ways of how Bitcoin could scale. And of course, that led to the, the big block movement and the Bitcoin Cash forks and all the drama of, 2017 there. So that's obviously fresh in everyone's mind, but I don't think this new Bitcoin Mining Council is that. So we'll see. Now, what else is happening? The other big narrative at the moment, of course, is what is happening in China. And, the China FUD. Is China banning Bitcoin mining? What's going on? That was part of the sell-off, particularly over the weekend, right? Bitcoin miners did appear to be selling. Now, again, a little bit too soon to know exactly what's happened, but we do have some clues. So this guy, Wu Blockchain, is a Chinese journalist who covers crypto. So he talks about here, the Security Times, a subsidiary of the People's Daily of China. They published an article which says that effectively Bitcoin mining runs counter to China's political goals of carbon neutrality. So that's just that's messaging or propaganda, if you like, from the Chinese State Department. Now, this guy here, Lucas Nusa, who is, so he's a co-founder and advisor of Dark Crypto and does a data analysis for Coin Metrics. He published this piece here, which talks about what's called Bitcoin miners are escaping China. And he examines the evidence of miners selling their coins, what the implications are for the hash rate, and ultimately why this might be one of the more positive developments for Bitcoin in 2021. Now, I'd encourage you to read this piece for yourself if you want to go deeper into this. So here's the piece. It's on Medium. So he's just talking about, all the bad news coming out of China, right? All the headlines and the sometimes conflicting statements that come from the Chinese State Department Council, all the kind of the top agencies across China. So he says, let's follow the money. He's talking about mining pools and mining. But yeah, here's what we want. So what is the on-chain data telling us? Effectively here, he's saying that the aggregate flows sent by miners to either exchanges or OTC desks, or just an indication that miners are looking to sell. It's at the highest level since March 2020. So this does support the hypothesis that the latest sell-off was in part driven by Chinese miners who were selling their part of their holdings in order to potentially escape enforcement actions by the Chinese authorities, right? So again, I encourage you to read through this, and then talks about the hash rate, and you can see the hash rate has dropped a little bit over this month because of the various headlines and as I say, conflicting statements that come out of China. So what does all this mean for Bitcoin? Well, I think this is the key point here, right? It's a gigantic opportunity for Bitcoin to address two of its most frequent and most overblown criticisms, namely Bitcoin's reliance on Chinese miners and whether that represents a threat to decentralization, and secondly, the carbon footprint that this reliance entails, given that, if Bitcoin miners are using dirty energy, most of those will often be in China, right? So really, really, really good and interesting article, that one. So again, Michael Saylor makes the same point. He sums this up. He just says, a crackdown on miners in China would actually reduce the carbon footprint of Bitcoin mining and increase the profitability of all the other remaining Bitcoin miners, obviously, reduce the nagging China FUD, support progress towards our ESG goals, and drive up the value of Bitcoin. So leave it to Michael Saylor to put that into perspective. Hard to argue with that. Latest developments in China. So earlier today, Sadovi One published. This comes from Inner Mongolia, who have published a detailed measures of a potential mining ban. Right. So if we go to what they actually said. This is it here. This is the translated version. It's the announcement on public consultation on 8 measures to resolutely combat and punish virtual currency mining by the Inner Mongolia Autonomous Region Development and Reform Commission. So I believe this is just a it's a proposal at the moment asking for it's a draft. It's soliciting opinions from business and the public and so on. So it's not actually law yet. So as Dovey said, 8 was an interesting one. So if we read out 8, it says relevant companies and related personnel with virtual currency mining could be included in the untrustworthy blacklist according to relevant regulations, and public officials who use their positions to participate in virtual currency mining or provide convenience and protection for them. These will be transferred to discipline, inspection, and supervision organs for processing. So that's bureaucratic speak for a fairly dystopian account of what would potentially happen to people who are involved in virtual currency mining in Mongolia should all this be passed, right? So, again, it's just CoinDesk reported on this as well. And, again, so I think the key point here is this is not in law yet, but yeah, you can see that the Chinese FUD on potential Chinese regulations, it is ramping up even more so than usual, and the net result could be that some of these miners do move outside of China, and ultimately, as we've discussed, hey, that's good for Bitcoin long term. All right, let's start to finish this off. Just a couple of other points I wanted to cover. Goldman Sachs, you may have seen this a few days ago. They released a new report on crypto as a new asset class, and they try and answer that question, yes or no. So, making the case for yes, crypto as a new asset class was Galaxy Digital's Michael Novogratz, and making the case against old mate Nouriel Roubini. Is that how you say his name? Don't know, don't care, but he's a long-time critic of Bitcoin, obviously. So yeah, I would encourage you to download the report. It's free to download. Here it is here, just kind of flicking through it. It's quite interesting. Just, the usual interviews with some key thought leaders, such as Michael from Galaxy Digital. Here's Nouriel Roubini with the case against crypto. He doesn't hold back at all, as you'd expect. And then, they make the case that Bitcoin is a macro asset, transitioning into digital gold and following previous kind of, gold-like behavior. And one other interesting data point from this report, I mean, there's lots, as you can see. Let me see if I can find it. Yeah, it's here. I'm not sure who these guys are, but they make the argument here that it's actually Ethereum, not Bitcoin, that will prove to be the superior store of value. And they base that on the fact that Ethereum obviously much easier has easier support for smart contracts, and there's this incredible DeFi movement. All the DeFi applications are based on Ethereum, so who knows whether that we'll just have to see. But yeah, fascinating report, and I guess the key point here is it's good to see Goldman really engaging with crypto seriously. So you can, as I say, download that for yourself if you're interested. Final point. What's the headline? Ray Dalio. He does have Bitcoin. So, I think we all know who Ray Dalio is. One of the leading billionaire hedge fund guys, and obviously very influential in the investing world. Always been a big gold guy. And has sort of been flirting around the edges of Bitcoin without actually saying Bitcoin for, a year, 2 years now. And what do you know? So he's actually come out at this consensus conference and basically said that, yeah, he does own some Bitcoin. May have bought it at the top in hindsight, don't know. But, Ray will obviously be, he'll be a holder for the long term, no doubt. Anyway, so won't go into that. But yeah, I think that's, just a positive move. And again, a serious endorsement from a kind of, legacy finance or traditional investor world. All right. That's really it, guys. So I think we'll leave it there for today. I hope you enjoyed that. As I say, this is I'm going to do these once a week. It's just a quick, fun journey through some interesting data points that we can find on crypto Twitter. All right. Thanks very much for listening, team. Don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using or here on YouTube. All right. See you real soon. This was the Crypto Conversation for Brave New Coin. See ya.